Alrighty, so this should be a quick video. We're going to be talking about the most powerful support and resistance levels, okay? So we're going to use this oil, for example, on Friday. We were talking about this on mic, and it was just a super clean setup all around. Okay, and it's just, I mean, it's a really nice level, right? Just a really nice level all around, just jumps off the chart at you. But here's what you need to understand. Everybody's kind of familiar with like basic support resistance. You know, some people subscribe to it, others don't. And even the ones that don't, I'm going to give you something in this video to explore, okay? And if you do explore it, if you do test it, I'm fairly confident you're going to be very pleased with the results that you receive. Okay, now it has to be within the proper context, of course, but you know, a lot of people have used basic support and resistance theory in the past and they just get crushed, as they would tell you, right? They just don't get that good of results, you know, with this basic support and resistance. But with this tip, you're going to increase the odds of success with these levels dramatically. Okay. So, and it's one really simple thing. You want to see these levels, like for example, take your focus here. What is this? This is an old low. You see this? You've probably have heard the saying, support when broken becomes resistance going forward, right? What is a level of support? Let's establish that. Support is an area on a chart where price has failed. It has failed to move lower in the past. This is the absolute low, where my cursor is. The absolute low that price hit before having that push up makes it a level of support, right? So comes up, takes liquidity, and then what does it do after it takes that liquidity up above? It displaces lower and it crushes that. Now, again, support when broken, resistance going forward, okay? And I think a big issue that, you know, traders have is like, okay, but what it's like establishing, excuse me, establishing when that actually becomes resistance, right? Because for example, you know, you could see something like this. Oh, but Mike, it came down, took out this support. It traded beneath it, but then it ramped up because that's a stop run, not a real break. And then that begs the question, okay, when does it become a real break? When does it actually become that resistance, right? Here's one really simple tip that you can utilize, and it's going to improve your odds of success, okay? You want to see that old low, like in this case, with it being an old low, it's going to be reversed if it's like an old high, right? Just the opposite. Look for these levels inside of fair value gaps. That one simple thing right there is going to improve your odds of success. We have this old low right here, and the fair value gap is right here. And if you're not familiar with fair value gaps, I'm going to leave a link to the video that I made on fair value gaps in the video description, how to identify them. But look right here, because we're not going to dig all into the fair value gaps in this lesson. We're going to go over real briefly. Look, 1, 2, 3. 3 candles make the fair value gap. The bottom of this one and the top of that one do not touch on that daily chart for oil. Look, that leaves an imbalance. This entire leg of price action was not, I repeat, was not efficiently delivered because it was too fast, too extreme, too explosive. It didn't have a chance to. It didn't have a chance to balance that price action efficiently. And what do you have inside that big break? What do you have inside that? Well, you have old low resistance. Having that inside that imbalance is a very clear indication that it has really cleared that level. Because again, as I was saying, that's a problem, that's an issue that traders have, is like establishing when it really actually becomes that resistance, that support broken. Like, how do we know it's not just like a stop run, right? And how do we know? Now, sometimes it'll still do this and it'll still be a stop run. I'm not saying that won't be the case sometimes, but you can get really nice plays off these levels. Like when you have this criteria inside that imbalance, you're going to get really good respect for these levels many times, okay? And then you can frame plays off of that. If you could wait for these key points of interest, you can build an entire model off that, okay? So we have this level and it's inside that imbalance. So kind of think of it like it's amplified. That level is amplified. It's going to want to respect that level once it returns to it, okay? So, and we have this thing. All right, so we were talking about this and how, because look what happened here. Like we were talking about this on Friday, me and my mentees, and we had this thing. It was pushing up, pushing up, pushing up. Look how it just like built in this liquidity. Like right before doing that, what I mean when I say it built in liquidity, it just created buy side, because we understand there's buy side residing above swing high levels. So we have this buy side that's created like right beneath that right here, which is also equal highs. It creates that buy side literally right beneath that level that we were just talking about, fellas, that we were literally just talking about. Like no coincidence, like it builds a liquidity right before it because it wants to test that. And then it builds a liquidity. Looks like it's going to sell off, but we're not fooled by this because we understand this. And then it's going to want to come up and take care of that. It comes up, it takes out the current New York highs. It tests that old low right there on that push up. And as we were talking about, we want to look for a lower time frame shift now. Once you get that shift, then you could look for lower prices. And this is where, so look right here. There's your shift on the 5 minute. We'll go to the 1 minute here. We'll check the 1 minute, see if the 1 minute gave something. But look, that short-term low right there. Look how it closed beneath that with aggression, with strength. And look how we got that fair value gap in there. That is without a doubt a shift in market structure. So the thing is, like you've taken liquidity too. Like it ran out this liquidity, which is what you need a significant liquidity run for a high probability shift in market structure. So that scratches off the list. But you know, the other thing that you got here to make it higher probability is going to be that level, actually having that higher time frame point of interest being that old low in this case. So it's taking out buy side and it's testing that level right there. Boom, nice big push, right? Nice big push lower, fair value gap, strong close, you name it, you got it right there. High probability shift in market structure, okay? Framed off a higher time frame point of interest. That is an edge. That is an edge. Because guess what? Most traders won't have the patience to wait for that. Now, you aren't going to get setups all the time. That's if you're framing it off a higher time frame level I'm talking about. Like price is fractal. Price is fractal. Like this isn't like just subject to the daily, like I'm going over here on oil. It's the same thing. Like if you're like on the 1 hour or the 15 minute or the 4 hour, when you have old highs and old lows inside of an imbalance, those levels are typically respected better. They're typically respected better. You literally see it happening right here. Like literally right there inside that imbalance, it comes up. I actually just barely missed it, but it came up a little bit later. It traded within that range and then rolled over, as you can see. But look, it's fractal. And what occurs, so if you're like maybe executing on a 1 minute or, you know, a 5 minute, you could get other levels on other time frames too. So I'm just going to make that clear. But here's the deal, fellas. This is where you got that shift. You get a retracement. I don't think it quite gave you a premium on that first push, which is, I mean, it's fine. But look, it came up into that range. Yeah, I didn't quite give a premium, but it found resistance off this imbalance. And then even right here, you had those old lows, but it didn't quite test that. Sells off. And then we see this thing continue to sell off. Let's check the 1 minute chart. Let's just see if it gave anything after having that push up. You see? Nah, it's kind of the same deal. Once it actually made up its mind, it didn't get much of a pullback, but you can see it in play what happened here. There was the push up. It takes care of it. And then we see this, this move lower. Then it does what? It attacks this little consolidation below, which is, and now on the lower time frame, you can see that market maker sell model in place. You see that? There is your smart money reversal off that level. And then look, it comes down and it's going to want to do what? It's going to draw to this consolidation down here and take care of that because there's sell side residing there, of course. You see? But I just want to go over that like really quick thing because it's very powerful. If you just implement this one tip into your trading, you're going to have higher probability trades at your disposal. But most people aren't going to, you know, do it, of course, because it requires patience. You don't get setups maybe left and right, which is what a lot of people want. I get it. But if you do wait for it, it'll be higher probability trades. Okay. So hopefully you enjoyed this video. If you did, leave a like, subscribe, and I'll catch you later.